You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me as always, Nigel D'Souza. After a big up move yesterday, we had a big down move on Wall Street. That playing out in the IT stocks this morning, but more importantly, the other parts of the market are more than undoing the impact of the IT stocks, and which is why the Nifty, despite the IT index being lower, is absolutely flat. The IT index down 6.2%. But look at the other offsetting factors. We have the Nifty Bank, which is up by about 0.25%. We also have an up move coming in on Reliance and some of these upstream oil plays, the likes of ONGC, Oil India. So by and large, a very good day of trade despite the weakness that we're seeing in the IT pack, especially after a 600-point up move that we saw on our frontline indices yesterday. But Nigel, a bunch of stocks, a bunch of companies on our radar.
Well, Welspun Corp, that's one of the numbers that were pretty good in the past quarter. And to help us out with the past quarter and the way ahead, we're joined by Mr. Vipul Mathur, the MD and CEO who joins us in the studio. Hi, Mr. Mathur. Always a pleasure having you in the studio. The numbers look quite good. But before we get to your numbers and the outlook, particularly in US business, which is looking up, let me ask you about the budget. Budget 2026, the Jal Jeevan Mission. They have allocated close to 67,000 crores. Last year, for various reasons, which we should not get into, is that the spend was relatively lower under this particular scheme. Do you think that the spend is good enough for you? And what kind of a pipeline and what kind of market share can you pull with regard to this JJM scheme?
First and foremost, good morning, Nigel. Always good to be back on your show. As regards JGM, I think so. We know that in the last year, the spending has been relatively low, while the allocations were in place, but the spending was low. I think so. There were some process issues around that. That's what we understand. Looks like that is behind us now. Right. Looks like now in the new budget, significant allocation has been made. I think so. The schemes at the stage they are at this point in time, they need to be done. This project, we have all the reasons to believe that will be pulled through for the next 2 or 3 years' time. I think so. It's a fairly welcoming move that the Honorable Finance Minister has made that type of allocation. Okay. And we are very, very confident that we will really see the money now trickling into the in this Jal Jeevan Mission in the coming financial year.
Is there a tender-based bidding that takes place? If you could tell us when is the next big tender for this particular JJM, if you could help us out with that. And also the problem in the past is not just ordering activity slowed down. The payments are not coming. So what is the total outstanding? And you mentioned in your press release that it's gradually coming in. So how much is coming in?
So it's typically this under JJM, these contracts are on a EPC basis. So the large EPC companies pick up those contracts. We are a supplier to them. In the last financial year, because the payments got stalled, the payments were trickling down slowly. So the EPCs have stopped their work or have slowed down their work. Now then the payments have started coming in. I'm sure that we will see a lot of traction coming in that process. All these EPCs have large contracts. They are only in place. They only have slowed it down. It is not that there is no business. The business is they are flooded with business. They have large contract with them. Just they were calibrating it because the funds were not coming in. Okay. Now the funds will start flowing in. I think so. Things will start coming back on track. 1, 2. As regards our exposure in Welspun Corp, it's relatively very small. I think so, and that is all under and most of it is like whatever the exposure, some 50, 70, 100 odd crore rupees exposure what we have is directly with the government. It is not with the EPC. So that is also a secured sort of an exposure what we have. Thirdly, coming to your point that we have started seeing that amounts have started trickling in, and I'm sure that by the first quarter probably everything should get sorted out.
So less than 100 crores.
Less than 100 crores. Yeah.
All right. And what about business then? We've spoken about Jal Jeevan Mission and the outlook that the government's put out in the budget. I'm looking at your first 9 months numbers. Your EBITDA is, very close to the 1,800 crore mark. This compared with your guidance of 2,200 crores. Just, extrapolating these numbers, this year you should end with about 2,500 crores on the EBITDA front, which is above your earlier, guidance. Is that a possibility?
Definitely, it's a possibility. There's no doubt about it. See, today, standing here and saying that, we still will be close to that. I think so. The way, the last three quarters have been good. The run rate has been fairly nice. And I think so. The fourth quarter booking and the fourth quarter execution, we already already into that. I think so. It's absolutely on track. I think so. It's very fair to assume that, we will definitely be surpassing our.
That's a foregone conclusion.
Yes.
The question is now, FY27, do you do 3,000 crores?
See, if you see, a little too early to commit to that number. But if you see, typically in my previous interactions with you, I have very clearly said that there are certain guardrails in which we operate, right? And one of the mandate and in the investor call we have said that our growth has to be 15% on a year-on-year basis on the EBITDA basis. I think so if we are ending up with the numbers what you are suggesting in this particular financial year, it's absolutely reasonable to assume that, next year is going to be even more stronger. And it is completely backed by, see, it is not that it is a hypothetical analysis, it is completely backed by a very, very strong order book in America, a very strong order book in India, and a very strong business visibility what we are seeing in the coming quarters.
Okay, I think, Mr. Mathur, what I would request you to do is next year give a more realistic guidance. I'll tell you what, because last few years you've been beating that guidance. So, challenge yourself a little bit for FY27 because you're going to be beating it this year only by close to around 10%. Going by the arithmetically, you're doing 600 crores of EBITDA on a quarterly run rate, and quarter 4 is the best. That argument for another day. Let's focus on two aspects. One is Sensex. The ramp up actually has been quite slow. It's not been up to expected lines. For the coming year, what can you guide? You've been ballpark 600, 650 crores on an annual basis. So for the next year, do you think you can grow by 20, 25% on that sort of a base? And will it be margin positive? That's on Sensex. And on Welspun Specialty Steel, we spoke about it in the past. That's turned around well. Do you think for this year it can do, say, 1,100 crores and high single-digit margins? Run us through both these two.
Okay, so Sensex, Sensex, again, to repeat, iconic brand, strong brand recall, blah, 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 everything. See, Sensex is also got slightly impacted on a growth front because of the, it's predominantly into the water space.
Right.
And the building construction space. Both of these sectors in the past few quarters were under stress for reasons known to us, right? Now, when we are coming out of this, I'm sure that traction and that velocity will come into the Sensex part of it. This year, probably we will be 600, 700, whatever that number might be. But I think so the next year, if all things go as per the plan, as what we are expecting that, I think so Sensex will be a sort of a turnaround story the next year. There's no reason of doubt as around Sensex.
So 1,000 crore possible next year?
Possible. 100. It is possible. Even. It is definitely possible.
Because you had said that 1,000 crore, when it happens, we'll think about whether we want to unlock value out there by listing it separately, etc.
That's a separate discussion, unlocking value. See, at the end of the day, we have to fundamentally believe into this particular brand.
Correct.
I think so we, as Welspun, we are absolutely convinced. We go with absolute strong conviction about the brand, this what it is. And anything and everything what we would like to push is absolutely going to unlock value for our investors. There's no reason and no doubts in our mind whatsoever.
So 1,000 crores of revenue and it breaks even. We have got that out of the way. And
I'm very confident about that.
Welspun Specialty Steel, the smaller listed company.
I'm so glad that, it is being recognized that it has been a turnaround story. It is actually a classic textbook. At some point in time we'll teach in management colleges around that. It's a turnaround story. I think so the company is doing extremely well. The sector is doing phenomenally well. I think so the way the growth is now looking is incredible. And especially if you see the defense allocation, the allocation into the nuclear sector, the allocation into the power sector, and the government of India making the story that, coming up with Atmanirbhar Bharat and the amount of quality control orders they have been putting up. Yes. I think so this is a company in a turnaround make, and I am sure that this company has one of the brightest future in our group.
So 1,100 crores next year possible with high single-digit margins?
Wait till Q4. I think so we'll give you very clear guidance about it, but possibly it looks like that.
And it stays a separate entity.
It stays as a separate entity.
Got it. All right, Mr. Mathur, not out of questions, but out of time. Thanks a lot for joining in. You seem to be on a solid wicket. Next time around, we'll wait by for your guidance. And also, in the next 2 years, maybe Welspun Corp, the EBITDA number, can it do around 4,000 crores? We'll ask you that the next time around.
I'll come prepared for that.
Thanks a lot.
Thank you very much.
Thanks a lot for joining in.
Thank you. Thanks.
Well, let's focus on a couple of other names. HAL is under pressure. Ria joins in to explain exactly why. Ria?
Well, yes, HAL has actually been knocked out of the race to develop India's 5th generation stealth fighter jet program, which is the AMCA fighter jet program. Now, these are industry reports that have been confirmed by analysts. And up until now, HAL was believed to be the front runner for this program, which is why today the street is reacting so negatively to this. Now, HAL had bid for this program with 2 other smaller firms. And in fact, this will also be the first time that HAL will not be involved in one of the country's most significant military projects. Now, in terms of the other bidders that have bid for this project, that includes Tata Advanced Systems, Adani Defence and Aerospace, along with MTAR Technologies, L&T, BEL, Bharat Forge, as well as BEML and Data Patterns, among some other companies. And as per reports, 3 of these companies have been shortlisted now, and the final project winner is to be declared within the next 3 months. In terms of the details of the AMCA project, the prototype development cost has been valued at roughly 15,000 crores, and the total project cost has been valued at roughly 1.5 to 2 lakh crores. This will be a big project. For the impact on HAL, it is said to be sentimentally negative for the company, and analysts do not expect any material impact on the financials of the company. Remember, the total order book of the company as of the end of FY25 stands at 1.9 lakh crores. So they already have a very strong order book, and at the end of FY26, this order book is expected to go to roughly 2.5 to 2.6 lakh crores. But nonetheless, the stock is down in today's trade, roughly down by 5.5% to 6% today.
All right, thanks a lot for that, Ria. We'll take a short break on that note. Come back on the other side. Another management waiting by Nitish Mittersen, who's the joint MD and CEO at Nazara Tech, joins in to discuss their third quarter numbers. Stay with us. Welcome back. You're watching us here on Chartbusters. The market's mildly in the green right now. A moment ago, it was slightly in the red, but it's finding buyers at lower levels. That's a positive. But Jio BlackRock has launched personalized investment advice, a digital advisory platform with plans starting as low as 350 rupees per year. The idea, the company says, is to pitch institutional-grade portfolio advice to everyday Indian investors. Shilpa caught up with Mark Pilgrim, who's the MD and CEO of Jio BlackRock, and started off by asking him whether this could prompt a pricing reset across the wealth management industry. Listen in.
I don't think it will force a reset. And I'll go back to what I was saying before. You've got different types of advisory, and people have an appetite for different levels of product. Some clients still will want to have a high-touch model and are ready to pay more than 350 rupees or 0.35% on the AUM base over 1 lakh. Some people are very price conscious. And so I believe that the offering is very different, that the interaction model is very different, the client experience is very different. Now, it's interesting that even though this is designed for mass affluent, we've seen an adoption of this model by high net worth in other parts of the world. I think that it helps with rethinking the industry and making sure the industry adapts to the client needs and requirements. But I think as to a whole repricing, I don't believe that's
Fair enough. And what products will you be investing your clients' monies in? Do you have anything already drawn out?
The most efficient way of creating this alpha is by using mutual funds, very often index mutual funds. Now, because we have this priority of making sure that our price point remains low to make it accessible to as many people in India as possible, we're using, first and foremost, index mutual funds. So that the overall total cost, if you take a look at the AUA, the advisory is 35 bips over 1 lakh. If you add the implementation element, using some of the asset managers that we have pre-selected, if people want to implement with us, you're at around 13 to 15 bips. So that's under 50 bips.
All right, so that is about Jio BlackRock Finance. Let's talk about Nazara Tech. They reported their numbers. Nitish Mittersen, who's the joint MD and CEO of the company, joins us now. Thanks a lot, Nitish, for joining in. Now, if I look at the reported numbers, obviously there are so many ifs and buts out there. The overall revenue, reported revenue is down 24%. The net profit down 64%. EBITDA is fairly strong, but a large part of that has to also do with the deconsolidation of the sports business and some of the acquisitions that you've made over the course of the last 1 year as well. So let's keep it very simple. Organically, X of all the acquisitions and deconsolidation, on a like-to-like basis, what has been the revenue and profitability growth for you?
So revenue growth is 10%. Profitability growth would be upwards of 25%. Right. But just to take a step back, I think the revenue decline at the headline number is basically because of the Nodwin deconsolidation.
Yes.
I think our focus on core gaming continues to progress very well. And as you will see, our EBITDA margins in this quarter have increased significantly to 16.8%. So I think we're very much on the right track. We're executing what we said we will execute. And the numbers are tracking what we expect.
Okay, all right. Hi, Nitish. Good to see you. And as always, one of the positives was with regard to Kiddopia and the resumption of subscription subscribers. I think there were many quarters where we saw a decline, and now that's perked up. What's the outlook from here on? Does this addition continue? And would you say the worst is behind on Kiddopia business?
Fundamentally, since the last year, we have created these centers of excellence in user acquisition, in data analytics, in artificial intelligence, and product. What these centers of excellence are doing are supporting each of our games and our studios to enhance the way they're operating. And the first positive impact and tangible impact you can see is in Philadelphia. As you know, we were struggling on adding subscriber base for quite some time. And this quarter, we've been able to do a net positive impact. And the best part is that our cost per acquisition has come down from $37 to 35.4 US dollars. So we've been able to spend more, but at lower costs, which makes us feel very excited that we can get growth going quite strongly in the coming quarters. We've also grown in this quarter.
Totally. That's an important factor, the customer acquisition cost in a business like yours, which was impacted earlier, but now it's on the mend. So that's positive. Just again, keep it very simple in terms of the investments that you're making in the business so far. What has been the total dollar value of investments that you've made in the company so far? And will you be making more? Are you looking at some sort of shareholder, fundraising?
Yes. I think we are continuing to invest organically in our existing businesses. That is very important. If you see any of our games like Animal Jam has been launched on Roblox, we've signed new licenses for TV shows like Creators globally. We recently launched a Big Brother game. There's a lot of investment that's going into existing business and growing the existing business. We are also actively pursuing new acquisitions of gaming studios and continue to be in advanced talks with a few. So that may happen. I think we will continue. And these new centers of excellence that we have created, the part is that they will really support all these studios that we acquire, add a lot of synergy and value to them.
No, I get that entirely, but still the dollar value of total investments that you've made in the company so far, because organically it's growing at around 10%. The sense one gets is that you'll be raising funds for funding growth going forward. So you will be using shareholders' money to buy growth. That's the short point here. So if you could give us that dollar value of investment.
So we, in the last year, look, because over many years we would have invested a lot of capital, but in the last year we did two key acquisitions. It was Fusebox Games and Games. Between the two, we invested capital of about 500 odd crores, less than 500 crores. Currently, the company has about 700 crores of net cash on its balance sheet. And if we require additional capital, we will raise capital. What we are very focused on is to ensure that if there is any capital base and there is dilution to the shareholder, the accretion in terms of cash flows from the businesses that we acquire and the prospects are far more rewarding than the dilution, right? So we are very conscious of that. And we will execute. If the one metric we are looking at is cash flow per share, right? It's significantly improved by any action that we take.
Okay, all right. And if you're doing a dilution, what could it be to the tune of? Will it be a 500, 800 crores, 1,000 crore kind of dilution that you're looking at?
If we do, perhaps in that range, but there is nothing.
Which one? 500, 700 or 1,000? 1,000?
I mean, it's a range, right?
So 700 to 1,000 crores, I'm guessing.
But there's nothing final at this point of time.
Okay, all right, Nitesh, we'd like to push you a little bit more, but I have to tell you that the Funky Monkey, is a bailout for someone like me with two little kids. When you need to work, go to Funky Monkey, let the kids play and you can continue your work. So that's a bit of a bailout. And I think Mangalam's getting there as well.
Yeah, so for me, it's not Funky Monkey. For me, it's Smash. And that's a bailout for myself. So if the kids need to do something, they can be at home. I'll go and play a couple of balls.
You'll get there, Mangalam, as the baby starts walking. All right, Nitesh, thanks a lot for joining in. We look forward to chatting up with you, discuss more about business and those inorganic plans as well. We'll track that. Well, time to slip into a short break. On the other side, we'll get you more on markets as well as on stock-specific action. Stay tuned. Well, the Nifty is continuing to hold in the green. The Sensex is trading more or less flattish. The mid-cap index is well flattish. But the big boy is coming and taking on the IT index. The Nifty Bank, it has a larger proportion in terms of weightage on the Nifty. And that's holding one end up, while the tech index is seeing some selling. We'll wrap up on this edition of Chartbusters. You stay tuned. The team of Trading Hour is coming by next.